We've got to start on the debt limit, which, let's be honest, is really just an agreement that lawmakers aren't going to shoot themselves in the foot. What sort of relief rally are we going to be expecting as a result of this?
Look, the deal itself is probably worth maybe 1% or so on US shares. It's already been anticipated to some degree because confidence that a deal would be reached partly explained the rally on Friday and maybe also partly the rally on Thursday. So you've already seen a bit of a rise there. Of course, the AI frenzy was another factor in there. But I think, you will get a bit of a positive reaction. We're starting to see that in US futures. Obviously, when the US share market reopens on Tuesday, there's going to be a bit of uncertainty about whether it passes through Congress. So that's going to hold the market back a little bit to the extent that you hear Congress people rejecting it and saying they're not going to support it. That might, give us a bit of a pullback. But I think broadly it is a positive. I think ultimately it will pass, but there could be a little bit more of uncertainty over the next few days.
Yeah, how enduring do you think this relief rally will be? Because once we take away all this drama around the debt ceiling, what fundamental issues remain that have been holding markets back?
Well, those fundamental issues are still there. Obviously, there are some positives. Investors' sentiment is still negative. Many investors in surveys look to be underweight shares. We've got that AI story, which is a very positive longer-term story. So those things should help. And, of course, the US economy and global economy has held up better than might have been feared at the start of the year. The flip side, though, is that you've still got the Fed sounding hawkish. We saw some inflation numbers on Friday, which are a little bit on the upside compared to expectations. The US economy is still likely to slow. That risk of recession is still there. If you look at commodity prices, say take copper, often referred to as Dr. Copper, it struggled to maintain any positive momentum. In fact, the momentum recently has been quite negative, and there's the uncertainty about the strength of the Chinese economy. So I think once this is out of the way, then you're still going to have a fairly rough ride in shares, and we're coming into a seasonally difficult period as we go into the June and then September quarter period, which is often rough for shares. So, yes, I think you get a knee-jerk reaction there. The other thing to note is that the deal does cap spending in the US, so you're going to get less government spending than previously expected, and you've got that liquidity withdrawal as the Fed starts rebuilding its deposit at the Fed. The Treasury starts rebuilding its deposit at the Fed. So I suspect we're still going to be in a bit of a rough ride for shares over the next few months.